Hey, Wall Street winners. Good morning. It's April 1st, Monday, and it's the start of a new quarter for the financial year. And what that means at both the start and the end of a financial quarter is it's usually a little bumpy, and for no good reason. It's just an arbitrary start to something that's a year that's broken into four parts, right? Into four quarters. And for whatever reason, if the first quarter, which it was this year, ended positive, then there's always concern amongst people that, oh, well, maybe we'll see a pullback in the second quarter. It has no basis in reality. It's just looking at things from a, mathematical perspective and looking at probabilities. But today is just another day that followed the markets on Friday. Usually the last day of a quarter, and Fridays in particular, can be fairly turbulent and volatile because of option expiry. And we didn't really see that. Certainly we didn't see that Friday because Friday was a holiday. We didn't really see it Thursday because last week was a shorter week and there wasn't a lot of volatility. It was kind of a quiet week going into the end of the first quarter. So what we see right now in the futures, so I'm looking at my Bloomberg app on the futures tab under markets, is about an hour ago, everything was in the green. Right now, the Dow Jones Industrial Average is down about 0.09% or 0.1%. The S&P is still up 0.1%-ish, and the NASDAQ, we'll call it 0.2% in the positive. So if we flip over to what we're looking at today in our Yahoo app, we'll start at the top with our health and retail. Looks like in pre-market, Lulu's making a bit of a recovery here, up $3.29 in the pre-market. So again, it's coming off of a big dive. If we look at the 1 month, you can see it was up around 480 at one point, maybe higher, and then it dropped down to the 386, 390 range. So that could recover over the next little while. It really hasn't in the last 7 days, but it could recover back up into the low 400s, depending on whether retail picks up. So if you are a Lululemon shopper and you're in the mall or you're buying things online and you're noticing others buying it and there's an uptick in retail consumer activity, it may be an attractive price to get in and hold that over the long term if you believe that that cycle is going to continue. Other stocks that have seen a huge decline there, Nike. So Nike saw a big decline as well, up around 105 back at the beginning of March, and then down to the low 90s, let's call it, at this point. So has had a bit of a recovery there. You saw the drop on March 20th, and then here you can see the bounce up to 95 on March 22nd. So that's, again, a bit of a dead cat bounce. Now it's come back down and it's resettled. So hopefully, if you did buy down at the bottom here after the earnings announcement, then you were to get out in the 95 range, and then you're just waiting to buy in as it plateaus and bottoms out. And it looks like at 93, 98, it's coming back to the 95 range, but doing that slowly. So if we look at the 1 day and pre-market, up 21 cents. So that's a positive on the retail side. Healthcare is off today. So looking at both HCA and Humana, both down in the pre-market. And again, for no good reason here, just moving around. The ATD.TO, the Couche-Tard stock, it had some bad earnings, I believe, last week, and that pushed it down. So looks like March 20th, and pushed it down from the high to mid 80s down into the high 70s. So again, if you're a believer in these kind of small retail franchises, often at gas stations, but more of a corner store type framework, smaller, more expensive items, but convenience related, then that may be an entry point for you there. If you look at the stock's financials below, and particularly the dividend, it doesn't have a great dividend. It's under 1%, and the price earnings is up to 18. So to me, still a little expensive based on where we are today in the economy. What we haven't seen really take a hit is our transport stock. So these things have been kind of hovering in this range. I mean, JB Hunt in the last 6 months has probably been up into the low or high two teens. So in around or less than 220, now down around 200. Its earnings are coming up in 14 days, so it'll be interesting to see what happens there. And then kind of a rock star of stocks, just kind of like a utility almost, is Canadian National Railway, a stock that Bill Gates owns, I think 1 or 3% of his portfolio. So he's definitely invested in this and a long-time believer and holder. This has an almost 2% dividend yield, and you can see here over the past 6 months that it's just kind of been on a steady climb. It hovered around the 140 to 150 mark for quite a while, and then it started to climb up, and it's gotten as high as, let's say, 180, 185, somewhere where it is now. So again, it's on the high side of maybe where it's been, but it's got some when's the earnings coming out? The earnings are coming out 4/23, so later this month in April. So we are, although earnings season is still going on for Q1, it's now rolling into earnings for Q2, specifically the financials, which typically kick it off in the first end of the second or third week, and then we'll see whether and how those are doing and what that does to the market. If we go down to oil stocks, a lot of opportunity still here, I think, in the oil sector, but on a kind of day-to-day basis. So if you look at the price of crude, it's around $83. It has been going up consistently over the first quarter. So if we look at the first 6 months, you can see that it's dipped down into the high 60s, and now it's up into the low 80s. It's very likely, with all of the problems we're experiencing right now over in the Middle East, particularly in Israel and Palestine, and the potential for Iran to get involved, that if Iran does get involved, there could be some serious implications to the price of oil. And if crude goes up, then it should bode well for net exporters and producers in the US. And that's really what we're looking at here in this list. Another very active one in the last week, which surprised me, was Con Ed. So if we go to the 5-day chart here, you can see that Con Ed dipped down into the low 87 range. And then all of a sudden on, I think it was Wednesday, it just spiked up into the 89 range, and at one point got as high as 90.55. And it's continued to kind of move up. So this is a stock that I do like to keep an eye on. And if it does get down into the 87 range, I'm pretty confident it's going to get back up to the 89, 90 range within a short period of time. If you look at the 6-month chart, you can see for a utility, it's got a fair bit of volatility. So the nice thing about this stock is it gives you enough volatility to make a small percentage increase on, let's call it, a weekly basis, but it doesn't really have a ton of risk where it's going to drop 10 or 20%. So as long as you wait for the price to come back down and you're willing to hold that for, say, 5 to 10 trading days, you'll likely make a small profit on this, and you could walk away at the end of the year with 20+% return just trading Con Ed. So, and it's at a reasonable-ish price, depending on what your capital is to make investments in the market. So at call it $91 US, it's relatively affordable. If we cruise down through the list, you can see Valero up around 171. Exxon is climbing up, up around 116. You've got CVE at 27, probably going to go up into the low 30s at some point. MRO has made a big comeback. It's in the mid 28s, probably going to get into the 30s as well. SLB in almost at 55, probably getting up to 57, 58. And then Helmerich and Payne in the 42 range, again climbing, and Halliburton, probably the laggard in this, still under $40. Then we get into the financials. If you want to play the options market, I would look at a put on Reddit, I think Reddit is going to come down back to, if not below, its $35 IPO price. There's just nothing to sustain the valuation that it's achieved right now. It's not going to have I don't believe personally, it's going to have the growth that is going to be required to maintain those multiples. So you can make some money on the downside or shorting that, but those are risky moves, so be cautious on that. You've got Palo Alto, which again took a hit at earnings. If it comes out with some positive earnings at the end of this month, I think we could see a bit of a spike there. However, it could have a second bad quarter and stay down or go down further. So there is ultimately that risk depending on your risk appetite. Cloudflare, kind of a newer entry point into this in comparison to Palo Alto. At the 97 range, I would wait for a pullback down to the lower 90s pre-earnings and see if I could pick some of that up, because I do think they're growing in market share, and you're going to see this stock continue to do well over time. Microsoft looks like it's doing pretty well pre-market, but it's already kind of at its peak. So definitely leaning on the AI benefits here and its relationship with OpenAI. We had a pullback last week in ARM, so I think we may see that turn around this week. Certainly positive in the morning, but means nothing when the market opens. And then as we scroll down, AMD, still, I think, a solid long-term buy with the PC refresh cycle coming up, but and it has a fair bit of volatility on a day-to-day basis, but not really a market darling. So you're not going to get the same kind of volume that you will with some of the other semiconductor stocks. A real laggard in this list is EA. I haven't talked about EA at all. I played EA a few years ago going into the pandemic with everybody at home and gaming going up. But this has just kind of hovered in this 130 range. So until we get a large game release announcement or some positive news, maybe an acquisition, I'm not sure what's going to cause that to move north at all. We move down a little bit further to some of the others. Tesla, where there's concerns in the market right now about delivery numbers in the first quarter and for March. So I think those are out in the coming week or two. Be interesting to hear what that is. I think we're going to see a miss in those, and we should see Tesla go lower. And it could be a very good buying opportunity, because this is definitely going to turn around. It's a company that has a lot of different profit centers and a lot of good things that are going for it. And right now they're just in a bit of a down cycle in terms of the car purchasing market. I think Meta is a really attractive stock today at 485 and change. It looks like it's going to open up. I think this is going to get into the 510, 515 range within 2 weeks. So I'm definitely a purchaser of Meta these days. And then NVIDIA. I mean, if you've had any exposure to NVIDIA, you've obviously done very well. It went up to 460. I bought a set of puts on that, which means that I was hoping the price would come back down and correct, which it did. So I made some money on the puts there. This is a stock that I think will come back into, it'll drop down into the high 800s, and then it'll probably spike again, assuming that earnings are good in its next earnings announcement. And we're pretty much 2.5 months out from that. So we've got a little bit of room there. Google is starting to catch up. It's been a bit of a laggard in this sector, but in the 152 range, I'd be looking for it to pull back into the 140s, and then I would certainly, or the high 140s, I would certainly buy some, because I think this is going to go to 165, 175 in the next 2 to 3 months. Adobe really hasn't started its recovery. It had some bad earnings. I think if we get some AI discussion and announcements out of here, start to see some AI, usable AI built into the product and started to be promoted, I think it has a lot of potential to go higher. And then finally, financials. So I was thinking that something was going to happen negatively to the financials, like the banking collapses we had in March, not to that extent, but maybe more to do with commercial real estate loans. And we really haven't seen that. So some of the stocks that are doing very well, JP Morgan, M&T Bank, our regional bank, has come back nicely. I think it's overpriced at 145, and it'll come back into the low 130s. probably prior to earnings, and then would be a good one to pick up because I think earnings will be positive there. Morgan Stanley is up at 94, which it hasn't been in the last 3 or 4 months. You've got Goldman up into the almost 420s, and it certainly hasn't been really above 400 other than I think last week in the last, well, couple years. Charles Schwab getting back. I mean, this could go to 86 in that range. And then, I mean, a huge dog over the last 2 or 3 years is TD Bank, one of our big Canadian banks. So I'm staying away from that. I do hold some, but just holding that for the dividend. Still underwater from a stock price perspective, and just waiting for that to recover. So that's where we are today. We've got some announcements around inflation related this week. We've got some Fed speak this week. There's a fair bit going on coming out of this holiday week. So keep your eye on that data and watch the overall market trends and the what the averages are doing. So your NASDAQ, your S&P 500, and your Dow, and pick your points when you're going to buy. Hope you do well today in the markets. And again, don't be afraid to not play the market or buy in. There are days when it's a lot better to just sit on the sidelines and wait for a better day and a better price. Good luck with your trades. If you like these videos, please subscribe and let me know in the comments if you have anything you'd like me to cover.